Hook options. 1. The fragile ceasefire between the US and Iran could shatter the markets overnight. Are you prepared for the fallout? 2. What's hidden in the shadow of an uncertain Fed chair nomination that could redefine your investment strategy? 3. Cryptocurrency slipped slightly today, but is there a tectonic shift looming that could create millionaires? 4. Current market volatility is just the calm before the storm. Discover the signs you must not ignore. 5. Critical conversations by bank CEOs on AI's threat could reshape financial security forever. Will your portfolio survive? The fragile ceasefire between the US and Iran could shatter the markets overnight. Are you prepared for the fallout? Today's market moves demonstrate the precarious balance as traders and investors hold their breath watching geopolitical events unfold. With stock futures only slightly budging, market sentiment is clearly on a knife's edge, waiting for a definitive signal. Meanwhile, the digital realm isn't sitting still either, as recent fluctuations in Bitcoin and Ethereum remind us of the cryptosphere's inherent volatility. Despite a modest 0.33% dip to $72,138.29 for Bitcoin, many retail and institutional investors cling to it as a financial safe haven amid geopolitical instability. Ethereum isn't far behind, slipping 0.56% to $2,232.66. As these digital assets weather the current geopolitical storm, seasoned traders see an opportunity to double down, hoping for future returns when international tensions stabilize. But before diving deeper into cryptocurrency trends, a noteworthy development has been Kevin Warsh's delayed Fed chair confirmation process. Warsh, considered a stern figure in monetary policy, has seen his nomination hearing postponed, creating yet another layer of uncertainty. His policies could sway inflation efforts significantly, an element critically watched by Wall Street, especially as inflation worries continually rattle markets. With S&P 500 hovering slightly down at $679.46, investors are understandably on edge, awaiting more substantive guidance from Washington. As these economic and geopolitical plates spin, Scott Bessent, an influential figure in hedge fund circles, convened major U.S. bank CEOs to discuss AI-related cyber risks specifically tied to the Anthropic model. Their concern: what AI could mean for both the vulnerabilities and defenses of financial institutions. This revelation signals an underlying shift. Major players are recognizing and reacting to AI's double-edged sword, weighing competitive advantages against potential security threats. Interestingly, while tech-driven stocks showed minimal movement, apart from NVIDIA's surge by 2.57 to $188.63, it's clear the cold, calculated embrace of AI in financial systems is more profound than ever before. NVIDIA's windfall comes on the coattails of increased investment in AI technologies, cementing its stature as a market leader in this transformative sector. But midway into today's insights, a cliffhanger looms. Could these AI-driven cybersecurity worries be a prelude to something much larger, like an unparalleled financial paradigm shift? Hold on to that thought as we pivot slightly to a less digital, yet equally pressing financial entity, the United States Postal Service. Efforts by the USPS to shore up its finances have included suspending pension contributions while seeking a 4-cent hike on stamps. The stark move underscores the deep-seated challenges facing traditional infrastructures in adapting to both economic and technological evolutions. If left unaddressed, these systematic vulnerabilities could have broader implications across financial markets, highlighting the importance of adaptability both for legacy systems and modern technological. So why should you care about these intertwined narratives of AI and stock market developments? Consider this: the actions of leaders in finance, whether negotiating ceasefires or navigating confirmation hearings, ripples across global stock markets and digital currencies alike. For investors, it's crucial to be more than just aware, but strategically aligned, poised to both mitigate risks and seize untapped opportunities. To capitalize on these market dynamics, stay vigilant of not just price changes, but also subtler trends brewing beneath the surface. A good starting point is diversifying your assets, balancing between the high growth potential of AI-aligned stock and the uncharted waters of cryptocurrencies. Meanwhile, Keeping tabs on geopolitical shifts and monetary policy can offer invaluable insights into where the tides may turn next. If today's scenarios unfold unfavorably, having hedges or exits prepared is crucial. Consider comprehensive risk assessments and perhaps allocate a portion of your portfolio to stable, inflation-resistant assets. Now, more than ever, an informed diversification strategy isn't just advised, it's imperative. Finally, it's not just about monitoring the present, but anticipating future market megatrends. Those who recognize early the intersections between digital and traditional markets stand to gain considerably. Subscribe, share, and leave your thoughts in the comments. Your feedback drives our financial dialogue forward, ensuring we all grow from today's market learnings to tomorrow's market actions. Transitioning now to the vital theme of technological innovation within finance, it's essential to grasp the transformative impact that fintech is having across global markets. Blockchain, artificial intelligence, and machine learning are not just buzzwords. They're fundamentally reshaping how we transact, invest, and understand financial dynamics. For forward-thinking investors and market participants, grasping the capabilities and implications of these technologies is critical. Consider blockchain and its ability to increase transparency and reduce friction in transactions. This alone can lead to a more efficient market, reducing costs and increasing access for a broader range of participants. Digital currencies and decentralized finance are also on the rise, disrupting traditional banking systems and offering new investment avenues. For proactive investors, a portion of your portfolio might experiment with these emerging assets to not only diversify, but also partake in this rapid digital evolution. Artificial intelligence and machine learning, on the other hand, are revolutionizing data analysis and decision-making processes. Advanced algorithms now have the capability to analyze market trends much faster and more accurately than ever before. Consequently, this has led to the rise of algo trading, where strategies are continually refined by complex models that adapt to live market conditions. Understanding these technologies and perhaps leveraging AI-powered investment tools can give you a competitive edge, whether you're managing personal investments or a larger fund. However, as with any swift technological advancement, there is an element of risk. Cybersecurity concerns have become more prevalent as financial institutions and systems interconnect. Ensuring that your personal and financial information remains secure should be a priority. Stay informed about the latest security measures and make it a practice to continually update your digital defenses. Looking ahead, one of the most intriguing potential developments is the integration of augmented reality, AR, and virtual reality, VR, in the financial world. Imagine a near future where immersive financial models are used for more intuitive data visualization, making complex market trends easier to understand and act upon. Companies investing in these technologies may very well be To effectively position yourself for what's next, continuous learning is non-negotiable. Engage with a variety of educational resources, from webinars and online courses to market analysis from trusted experts. Your commitment to expanding your knowledge will pay dividends, both tangible and intellectual, as you navigate the evolving market landscape. Ultimately, the fusion of technology and finance presents unprecedented possibilities, compelling us to rethink traditional investment strategies. By staying informed and adaptive, you're not only safeguarding your financial future, but potentially capitalizing on the next big market shifts. So, keep exploring, question the status quo, and most importantly, remain curious. Let's continue this journey together, fueled by knowledge and shared insights.